the Fed held interest rates at their last meeting, and yet all of the news reports described the meeting as a pivot, and big headlines: Fed pivot. So what do they mean by that?
Yeah, that's a great. Well, first of all, thanks so much for the invitation. Thanks so much to you and the Concord Coalition and the audience for inviting me on today. It's a real pleasure to be back again. Turning to the Federal Reserve Board meeting last week, the reporting is that it's kind of describing it as a pivot, and I think the reason they're describing it as a pivot is prior to last week's meeting, the conversation was more about do we have inflation under control? How long will the Fed hold interest rates? Will they need to go higher? There wasn't a lot of attention on lowering rates, at least kind of in the Federal Reserve conversations. And at the meeting last week, the so-called dot plot, which indicates what the voting members of the FOMC think will happen to interest rates going forward, they indicated in the dot plot that over the next year, between, let's say, now and next December, they anticipate three 25 basis point reductions in their federal funds target rate. So they were very clear in thinking that rates will go down. They'll go down by about 75 basis points. That will happen between now and December of 2024. And so that kind of has, I think, led to the pivot from, rather than holding, now we're kind of looking at rates going down. Then I would say that when rates will start going down is a really big question. I think after some of the reporting, some of the members of the FOMC, the Federal Reserve Board, I think they tried to pull back or couch or qualify some of the thinking around the reporting from the Fed meeting, and have indicated since that inflation is still a serious problem, and they will be very attuned to that. And one shouldn't think that they will aggressively lower rates. The reason that's important is the 75 basis point reduction in the dot plot that the Fed indicated is a little bit at odds with market expectations. Market expectations seem to suggest not 3, but 6 25 basis point reductions between now and December 24, 150 basis point reduction, a much more aggressive reduction in rates. Market expectations are for the Federal Reserve or the FOMC to hold rates where they are at their January meeting and then begin to lower them in March, and then cascade down by the 150 basis points between March and December. And I think the Fed, was trying to kind of reset expectations a little bit. That view, that more aggressive view, is one end of a bookend, and the dot plot is probably the other end of the bookend. All conditional on how inflation continues to evolve. That's kind of always point 1, 2, and 3. So it's very, very interesting.